we basically acquired in the EBITDA-profitable Onshore. It's the joint market leader along with Full Circle in the servicing of onshore distributed wind in the UK. And the figures out there, we paid 3.5 million for it. That came with 2.3 million of working capital and quite a large amount of stock.
All right, welcome back inside our Proactive newsroom. And joining me now is Cathal Friel. He is the non-executive chairman and founder of European Green Transition. And Cathal, it's great to see you again. How are you?
Good, Steve. Thanks for having me on.
Yeah, so you're out with your final results for 2025, and of course that was a super interesting year for the company and really transformational because of the work that you did as far as an acquisition is concerned. And maybe let's start there and talk to us about the year that was.
Yes, Steve, the year was last year. EGT was my fifth IPO, and it followed a routine on the previous four ones. Set it up initially quite small, raise a modest sum of money with a bit of a concept and idea, and go and look for distressed assets. Amrit Pharma, we did the exact same. Found distressed assets in Germany, bought them for about less than 5p in a pound. That's called Birkin. And hey, presto, 7 years later, we sold it for $1.5 billion. Now, not saying we're going to do that with EGT, but we've done it as well in Open Orphan. Again, we picked up two distressed assets for about 10p in the pound, and 10p in the pound being 10p on the original invested capital. And we got that up to 400 million market cap at its peak. And that has come off somewhat since, but I would have sold out when it was up around 30p and give guidance to other people. If the founder is selling, that's a good time to sell. Did it over 2 tranches over a year. And so EGT, likewise, we set it up small. We said we were going to go look for assets. And then last year, having sold out of hVivo, because I was very actively involved as an executive chairman there, sold out, stepped down from my role in hVivo, allowed me to focus a lot of my time in EGT. And that's why I stepped up as executive chair last year and very much focused on the skill I'm good at, is finding assets. And yeah, we were absolutely delighted. We found distressed assets, and yeah, we're really happy about them. They're basically, it's a playbook all over again. We got them for a fraction of invested cash.
Yeah. Now, for those not familiar with it, tell me about the acquisitions.
Yeah, look, we're very excited about them. It certainly is utterly transformational with EGT. We basically acquired in the EBITDA-profitable Onshore. It's the joint market leader along with Full Circle in the servicing of onshore distributed wind in the UK. And the figures out there, we paid 3.5 million for it. That came with 2.3 million of working capital and quite a large amount of stock. So it doesn't get any better than that. We gathered the original owners would have spent many multiples of that. I think in the region of 25 or 30 million at least putting these assets together. The parent company did go into liquidation. So yeah, that's the time we pounced. The management team we loved, and the two Daves, Dave Smith and Dave Broadband, they've been running it for years. And we've been talking to them for at least 18 months. They said, we would say talking, they would say stalking. And that's the skill when you're acquiring something. You just can't pick something up. So we got to know that company really, really well. And basically the main company in it is Earthmill Maintenance, based up in Harrogate, sister company, WEP in Southern Ireland, and Silverfort in Northern Ireland. They're the one company, basically. And we also got kind of thrown in free of charge a stake in Animus software as well, which is condition monitoring. The business every year did about 14, 15 million. Bear in mind, it's a maintenance and repair business. So very predictable, very sticky. And the exciting bit is the removal. We just sometimes, as Margaret Thatcher once said, the harder you work or the busier you are, the luckier you appear to get. So we've been busy and we got lucky. The UK government immediately, or before we acquired it, was that they removed the ban that was on the turbines. That kind of made us really interested last year as we continued to look at it. Boris Johnson and his little lady and friends had actually banned for the last 9 years, you could not put up new wind turbines onshore in the UK. He overturned that. Or the Stammer government overturned that, and that worked way through last year. So now suddenly we've got a portfolio of 900 plus turbines who we look after. We don't own them, we maintain them, repair them, and run them for the owners. And about a third of them are overdue upgrades, but they were not able to upgrade them because upgrade means put up a slightly more powerful generator. that would mean plant emissions banned. So at the moment, the company has literally in recent months, since January, signed 55 heads of agreements representing 24 million in additional new revenue over the top of that 14, 15 million it does every year. And we've got a pipeline of 280 qualified customers of our own, all who are expressing an interest in potentially moving to a bigger, better turbine. And I guess that's about 120 million plus of a back order book that's potentially there at the moment.
So that wind energy business seems to be really, really rolling here.
Yeah, it's just the right place, right time. UK has decided they're wanting to really get into the renewables the big way. And again, that was, look, being honest with you, that's part of the reason we continued stocking this company. We didn't want to overpay for it. And we kind of knew the parent company had borrowed 170 million from loan note holders. Yeah. They promised high yields, 8-9%. They invested in low yield wind turbines yielding 3 or 4%. So it was kind of inevitability. We were waiting and waiting. Sometimes you've got to wait. But like the movies, hold before you fire. And we waited, and the company imploded. It went into liquidation. But luckily, the parent companies where the debt was, there was 30 odd subsidiaries, particularly the subsidiaries we bought, and they traded as normal during the liquidation process. So we were able to pick them up really, really cheap.
Okay. You mentioned Animos earlier, and you increased your stake actually there recently as well. So talk to me. You obviously like what you're seeing there so far and wanted to increase.
Yeah, look, we further increased our stake by an additional 27%. That brought us up to 79%. The other, you might ask, where's 21? That's with the management team and founders of Animos. And this is a really interesting company. One of my original background careers all those years ago, 25 or 30 years ago, I used to run a software company. And for my sins in 2003 and 4, I was chairman of the Irish Software Association. That was a voluntary job. But so software is something I do like as well. And this Animos basically delivers predictive maintenance solutions and real-time monitoring for the wind turbines. It's very much AI enabled condition monitoring. It's the future of wind turbines. The big multi-million investors, the 2, 3, 4 megawatt ones, you pay 2, 3, 4 million, comes with this software, but it's impossible the smaller turbines to be able to afford it because they're cheaper. So now we've got a solution that people can get. So yeah, we're well positioned. We wanted to increase our stake when we got comfortable. We want to keep the management team motivated, say retain their 21%. And we're really excited how we can grow it. And I've been on the record as well. I think it's very complementary to everything, the current fleet of turbines we have. But by keeping it as a standalone company within EGT means we can sell to Earthmill's competition as well. A lot of Earthmill's competitors don't have this solution. It's a very technical solution to have. It's a software solution. So we want to keep it a standalone. And ultimately, we believe it could be spun off into a standalone public company. My 6th IPO, maybe next year, we might spin Animos off it as a standalone public company.
Okay. The rest of 2026 sounds like it's going to be pretty busy. What's going on? You got a lot of things on the go.
Yeah, look, the rest of 26 is drive the ship, get that revenue. I've talked a lot that we will, and I believe that we can get the near-term revenue. Is that 2 or 3 years, up to 50 million? I think there's a possibility. It's always about next year. Wow, it would be nice if we did 50 million next year. If we don't do 50 million next year, that's i.e. 2027. We'll absolutely certainly do it during 2028. So the near-term thing is deliver as much as we can this year, grow that revenue. Critical focus, grow the EBITDA. Everything has to be profitable. Say earlier this year, post-acquisition, we did successfully raise. We went out to raise 5 million. It goes to show you the market. Maybe it's because we've done this 5 times before. It's our 5th IPO. But we went out to raise 5. We got binding offers from institutions of 15.5 million. We naturally increased the raise to 7.5, but we had to turn down the rest of it. So we now have a nice little clutch of cash. We are debt-free, EBITDA positive, and we will do small bolt-on acquisitions. And we're in probably one of the highest growth areas at the moment, UK onshore renewables. But there's 2 other areas across Europe we really, really like. I really like the idea that the UK and Ireland and Europe, with renewables, they're replacing the national grids. So there's a monster. I think the UK has announced they're going to spend something like 350 billion, not on data centers, but on the national grid. Ireland, which is a fraction of the size of the UK, is going to spend 35 billion replacing the national grid. It's going to be a huge amount of work in that electrical engineering space. If you think what we are electrical engineers. We're servicing, maintaining, and operating wind turbines. And then the other big area across Europe at the moment, it's the biggest area in the US, is the data centers. So again, there's a complete electrical engineer. We're not in that area at the moment, but we believe over next year that's another area. So in summary, get that 50 million and a little bolt on here. We're going to be very selective with it. We're not going to go mad and keep building that cash pile and making it a very successful company.
All right, we'll keep an eye on that. Cathal, thank you so much. Good to catch up with you again as always, and we'll talk soon, okay?
Steve, thank you very much. That's great. Appreciate
All
talking.
right. Yeah, you as well. Cathal Friel, the founder of European Green Transition.